Oh my goodness, I am so excited about today's video. I literally can't help myself. I am pumped. I'm excited. Let's just get started. We're going to talk about Coinbase. We're going to talk about SpaceX, Palantir. So much to talk about. A lot of amazing, incredible news and some funny jokes by me, Tom. By the way, if this is your first time here, my name is Tom. As you noticed, I used to be a senior financial analyst. Now I am a full-time YouTuber talking to you about the stock market, financial world, and economics. And in today's video, I want to talk to you about three things, starting with Palantir. Now, unless you've been living under a rock, you have probably heard about the Palantir double-click event, which I usually call as the Demo Day 2.0. This was the second, much more polished demo day for Palantir. Everybody was hyped for it. You couldn't get a seat on this stuff. You actually had to register, and most of it was actually preloaded and you couldn't get in. Unless you registered way in advance, this thing was closed. It was such a cool idea to oversubscribe the viewing, even though it was on freaking Vimeo. I like that little trick. I think it's a really nice touch. However, on the most serious note, even though this thing was so hyped, so crazily talked about by every single person I know of, the stock price went like a balloon. This thing released so much hot air, essentially plummeting by 7% on the day, competing only with Jerome Powell on who can crash their shit faster. Now, why the hell did the Palantir demo day crash the stock by 7%? What's going on? Well, there's honestly a good explanation of why, and it's kind of amusing. Well, the first part is, and it's less amusing, is the fact that people had unrealistic expectations. First of all, they treated this as the launch of some new feature, which it wasn't. It was a demo of an existing product. And we then didn't see, Alex Karp launching himself into space with an invisible cloak made of Palantir AI on a SpaceX rocket with pyrotechnics and, dancers and singers and Eddie Murphy singing Hallelujah. When you didn't have all of this stuff going on stage, people were disappointed. And I get it, because half of the people who watch these demos are people who expect some gobbledygook nonsense, godlike behavior by Alex Karp, and they're not going to get that. So whenever they get the geek talk, the nerd talk about these little features, they get disappointed and they sell, and that's fine. Now, you have the second part, people like me, the nerds, the geeks, even though I'm not an engineer and I honestly don't have the mental capacity to fathom 50% of what these guys are doing, I still enjoy the talk about these new little features, how they improve CRMs, predictability, models, the UX, UI. I really enjoyed it, and I think half, Eddie, of the viewers actually really enjoyed it and got a lot out of it. Now, the conclusion here is that this stock is probably going to be in the red for at least a good year. So unless you want to invest for the next 5 years and you're banking on this to be the most disruptive company in information handling, in IT, in any sort of information industry, you probably shouldn't invest. I mean, this is a company for the very long term. It's going to be red for a long time. I don't see it bumping up anytime soon before 2022, maybe second half, maybe 2023. You got to have a lot of patience for this stock. This isn't for the faint of heart. Now, I personally have so much faith in it, I don't give a shit. I'm actually going to be investing more and more as the stock stays at 24, 23. It's a great opportunity for me, but just my opinion, might be wrong, might be inaccurate. You gotta do your own research, find out for yourselves, allegedly, blah, blah, mother effing blah, because this might be the ramblings of a madman. Who knows? By the way, new shirt saying Ramblings of the Madman. Below, you can get it in the merch store. Low quality, high price, just the way we like it. Now, for the second piece of news of the day, we got to talk about SpaceX being valued at $74 billion. And the reason we know this is because they actually filed this form with the SEC. Now, you got to ask yourself a question. Why the hell is SpaceX reporting to the SEC when they're raising money from private people? They're not a public company, right? Well, the reason being, if I scroll all the way down here, you see Rule 506B. Essentially, that's a Reg D filing. Basically, to keep you just out of the loop of all this nonsense, the bottom line is that this allows SpaceX as a private company to raise unlimited amounts from the public without filing a prospectus with the SEC, as long as they're only raising money from rich fuckers. Simple. It means accredited investors, you gotta have at least $1 million and make $200,000 per year for a couple years. Just look up the definition. That's not the point of this video. The point is that they just raised $1.16 billion at a valuation of $74 billion. That means that these motherfuckers are really close to IPOing. If you have that kind of money running around for these private placements, imagine what this is actually going to do in the stock market. And by the way, look at what Coinbase did. Just to show you Coinbase versus SpaceX, I like Coinbase, don't get me wrong, I'm a huge fan of Bitcoin, I love Coinbase, but comparing Coinbase to SpaceX is like comparing a tricycle to a spaceship, pretty much. I mean, there's no comparison. SpaceX is definitely the more cutting edge, can be replicated, can be copied. That's the bigger business. So if SpaceX is valued at 74 billion on a private placement to private accredited investors, we have Coinbase closing yesterday at a valuation of $85 billion, almost $86 billion. So SpaceX is worth much less than Coinbase. I don't think so. And that's actually the third piece of news here. Coinbase actually launched yesterday on a direct listing. Launching out of the gate, the stampede started with $380 per share. It seemed like a lot of angry mob people coming out of a Van Halen concert, everybody with the long hair like in slow motion, but it kind of mellowed down. But we're still closed at $328, which is still higher than the expected price by the Nasdaq, which was $250. So it's kind of a mixed bag. However, it did close on a valuation of $86 billion, which would classify this as a very successful and actually good listing for this company. I really like what they're doing here. And if you remember, yesterday I put out a video saying that Coinbase can actually double this valuation because they're so correlated with the price of Bitcoin. And it seems that the trajectory of Bitcoin is well into space. So who knows, this thing can double or triple, depends on how Bitcoin goes. And essentially, that is also its biggest weak point and risk. If Bitcoin crashes, this valuation is going to go much like the Palantir stock yesterday. It's going to go down like crazy. So if you're investing in Coinbase, you got to understand that this is extremely correlated with the prices of Bitcoin and the presumption of lack of massive competition. But I believe that based on the numbers they're doing right now, if they can sustain an annual growth of 20%, they can actually get to a much higher valuation. Now, one last piece of news before I let you guys go. TSM actually beat expectations. Surprise, surprise. I talked about the stock so much. It's one of my favorites. They beat revenues by 240 million, 52% gross margin, 41% operating margin, net profit of 38.6%. These are monopoly money numbers, and they're giving out a dividend of 88 cents per dollar, actually US dollars, $2.5, Taiwanese dollars, whatever they are, 88 cents per share. So you're getting a dividend and you're investing in a company that's pretty much the monopolizing force in the entire chip industry. I don't see an issue with it. One of my favorite companies. And again, just my opinion. Do your own research. This is not financial advice, just my opinion. Thank you for the channel members and the patrons for making this possible. We'll see you guys in the next video.